But this looks like puppies and rainbows to me. Wheat's up one.
It's brutal.
Oh, man.
Yeah, no one's going to want to hear about what's going on, that's for sure.
Well, are you going to talk about it, or are you going to sugarcoat it?
We'll talk cattle, and we'll talk this, and we'll talk about more positive things.
All right.
And like time frames and like what normally you see during the summer.
Welcome to Hedge Heads, where hosts John Prischman and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, with a holiday week here, we're combining the Insider and the regular podcast. So we'll be insider length, but open to the public here, right? Everyone's getting this. And what a great day to do it, because all we have is happy, great, fun news throughout the commodity markets.
That was last week. This week it's the same terrible grain markets that we've had before. And cattle's joined the group. It's not acting very well. Went down on that rumor from the screwworm. And it's just there's not a lot of positive things to talk about. Normally we'd be going up this time of year. They're saying, yes, the crop conditions were lower than they expected, but it's very early and they completely have ignored it, and everything's leaning to the downside. They're saying exports are going to slow. Everyone knew that was coming, but it's when you have a negative market, it doesn't take much to negative news to really drive it down. So July was leading the pack last week in corn, and this week it's just getting demolished, and beans are starting to follow. Wheat isn't falling anymore, but it's been falling for the last week, and it's taking a little break. The Minneapolis wheat crop conditions were really low. I think that they don't care this early. If they see it improve, they'll start trading that a little bit, but everybody's very negative on the grains. The fund-wise, the meal has record shorts. Wheat has near record shorts. Beans were hanging in there. They look terrible. And, yesterday it went down 13. And then the corn just absolutely lost it in the front. July leading the pack, down 8.5 yesterday. So just a lot of bad news in the grains with absolutely no weather threat in sight, and that's the problem.
So even our good news story, cattle, you want to talk about, usually cattle's leading the pack, right? We've talked about that for over a year, but now we got fake news coming out that it did drive it up briefly, right? And then straight down.
The screwworm, there was a story from a radio station that was printed, the USDA confirmed, I think, a case in Missouri, and that wasn't true, but the futures went down 7 in feeder cattle, $7. Came back after it kind of was figured out that none of this was true. Would that even be bearish? I'm not even sure that's even bearish, but the damage was already done. So when they cleared up the rumor, you'd expect a quick rebound the next day, and that's not what you saw in cattle at all. But it just goes with the entire commodity complex now. There's just that buying spree that we had seen last fall has completely reversed, and now everything's just negative news. You're not seeing these recovery bounces that you would see. You have cattle well under cash. You've had good news in the front of corn for a very long time. That's acting like the numbers are way off from the USDA, and we have way too much corn around already. I certainly hope the numbers aren't wrong, because that 1.8 for next year's corn is going to be completely wrong. And if there's more corn carried over than they expect, it's going to be a big mess this next year. Ohio's the one state, though, is very behind in corn planting. I think they're thinking 1.5 million acres might not get planted in corn. Of course, this number is not going to come out for a very long time, and that's going to be the problem.
I can see where that's a problem. It's not, at least the weather's great, right? The plantings are good. Everywhere except Ohio, it sounds like.
Yeah, and we could feed into all this negative stuff, but there's really no reason to. Everybody knows the sun's shining, and things do change fast in the summer. We were talking about meal earlier, and you look at like some of these meal spreads, like October next March. That's when meal can get very tight, is in the fall, believe it or not. It depends on the year and depends on Argentina. But you see these record lows for this time of year, almost record lows, or 20, 30 years. So these are absolutely pounded down to nothing. They're heavily short meal, but are they even wrong? If they were wrong, you would see it in the cash market, and the cash markets aren't responding in any market really. So these guys just have a license to continue to short it nearly every day. But still, that creates the opportunity. I'm looking at ways that a guy can get involved in soy meal. Nothing that I'm going to do today, but it's something to track. You get that change in weather. The bean numbers are already very supportive, even with a perfect yield. You get that change in weather, that change in attitude, and then there's the opportunity. I guess that's what a guy waits for here. And that change would be they trim a bunch of this rain out of the forecast, and then they warm it up. But right now, like you said, it's about as ideal as it gets. I wish we had better news this morning, but you're gonna be looking at a good yield. I guess that's good news.
Right? It should be.
Yeah, it should be. But the options, the way that the trading's been working is you can stick around stuff for 2 or 3 days, and you seem to have to take your profits. It does give you profits, but if you don't get out, it takes it right away again. So that's been the issue, that you can be right and still wrong in this market. You just have to time it perfect all the time. Very difficult market to navigate.
Yeah, and the markets have been that way. I mean, really all year.
Really unforgiving. Since September, really, when they started this momentum grain trading. Like, it'll get on these runs, it'll break out, and then it'll just completely fail, and they'll throw it away like they never wanted it in the first place. And you've seen the cycle over and over again, where the calls make money, and then if you don't take it, it takes it all away. Selling a call, selling a put on these big, like this downdraft that we got going on in the grains now, selling that side, if you can time it to some degree, has worked, selling both sides. But you wouldn't want to sell a call now that the stuff's in the hole. You'd more be looking at selling puts, but that's not going to help hedging at all right now. Selling puts, you're not going to need more grain if it happens to get exercised. So it's been a very difficult market to get anything figured out. The volatility, the implied volatility of the options is terrible. And I mean, it's good if you're a buyer, but that hasn't been working, like I say, unless you time it perfect. So it's just been this really stick and move market that's been really difficult for me, for everybody.
Yeah, I was going to bring up the volatility because I probably talk about it too much, but to me it's important. And man, is it low.
Yeah.
I mean, especially in the soybeans.
Yeah, you don't normally see this time of year. Yeah, this is a highly unusual. Normally the trade would be on edge. You'd be worried about this thing or that thing. You do have the stuff going on in the Eastern Corn Belt in Ohio and the delays, but you'd be worried about that hot and dry forecast. This is the time of year where you have that rain drying up, and then all of a sudden they have that 90s, 100s. It's something that scares the trade into being short. You just don't have that this year. There's just nothing that scares these guys. They seem to pile on more every day. Eventually that will create an opportunity, but still, if you're following grains and looking for better prices to market, these are the worst markets that you could possibly be involved in.
Right. We should talk about that, though. I mean, with the shorts that are out there. Yep. Should something change, it could be a significant rally. It could have a lot of fire. And
that's what you're looking for, is the opportunity. How can I get in front of this thing? Do I wait for the forecast to shift? Well, that's the smarter thing, because being early, you don't need to be early to this market. But when it does turn, because they're so heavily short at this time of year, absolutely could really go much higher very quickly because of the positioning. Highly unusual that they're positioned this way going into summer. 2014, maybe 2012, the drought year, they just were aggressively short, and 2012 obviously they paid the price, but 2014 it was right. Like, it was kind of the way that it is this year. Just no threat from day one, nothing ever developed, and it downtrended the whole year. That's extremely rare, but that's so far what's happening.
Yeah, extremely rare, but it's happened within the past 10-ish years.
Yeah.
I mean, reality.
Well, so far. I mean, 2 weeks from now, the good news is that it changes so fast this time of year. 2 weeks from now, we could be talking about all the bullishness that's happening. The numbers really are supportive. 1.8 for corn carried over with a perfect yield, 181. 52.5 we need for yield in beans, and then we're going to carry over only 295. So there's zero room for error there. The market just doesn't care. And one day it might, but that's the way it is. And then, like we were talking about cattle, market's not responding to good news. That doesn't mean the top's in, but it's simply not responding to all this good news. Then you had that rumor kind of break it down. You'd expect a quick bounce back. We haven't seen that. And we talked briefly about the metals, and like we're going to start looking at other markets to get involved in, because unless you just want to short grains every day, which is very dangerous down here, it's going to be tough. I did look at the July corn, and it was 474. So with some creative marketing, you can get that price 474 if you can store your corn. Look at selling calls maybe in a different spot this summer, and actually get towards a $5 price. Now, that being said, all these strategies using all that carry, all that time, involve a lot of risk. And that's been the main problem for hedging this year. Is if you're going to do it, it's involved a lot of risk. Now, the guys that sold 474.80 way earlier than you normally would sell corn are the winners so far this year. That was the ticket. That 489, I think it even got to in December.
Yep.
That was
it was early Jan because
or February.
February, because we had the bet in December.
Yeah. So the February high, which everybody says that can't happen, it hasn't happened. Well, it's happening so far. So you had an unusual February high, and that's back to how tricky this has been. The funds loved it until February, then they just hated it one day. That was corn anyway.
Right. It was the opposite with the soybeans, really. They hated beans up until March. Ran it up a little, but
they've been going back and forth. Yeah, and they didn't really, it's held $10 forever. I would expect all this stuff. Hopefully corn doesn't go into the threes. I mean, what are we, 427 for September right now?
I don't have September up. December 441, July 446.
I think we're in the 420s for September, so it wouldn't be much more of a rundown to get into the threes, and that's going to be not a great thing to see in summer. I mean, the threes in summer.
When was the last time we saw threes? 2019?
No, it was March 2023. Or it might have been 24, where everybody was holding in the deliveries. It hit 397 intraday, and then it was like 402 by the close.
Okay.
But it hasn't closed in the threes in a long time, and the path that this is on it's like if these guys are going to keep on selling it every day, I mean, it won't take long to get there.
Well, I guess we need seed and fertilizer and fuel and all that stuff to go way down then, so we can make money at $4.
Yeah, and I've had some conversations, guys. The next step is put a lot less fertilizer in. I mean, these are big farms. These are guys talking about what can you do now to defend against these prices, and it's less fertilizer, and eventually the market will fix itself. The yield won't be there, and demand will pick up, but when you got South America ready to bring in a big second safrinha corn crop, the one they export, Brazil, and that's going to hit the market in July. Then you look at us bringing in another big crop on already a market that doesn't want to go up. I mean, it doesn't bode really well, but things do change very fast. And as doomy and gloomy as this is, it tends to not be that way a few weeks from now.
Especially this time of year, we can't stress that enough. I mean, all these producers know that, but things can change tomorrow, and the forecast.
Yeah,
good luck having the 10-day be right.
Yeah, and I've heard that comment a lot on the phone too. It's they go out 10, 11, 12 days. They're already to June 10th, and it's perfect. They have a hard time covering out 7 days. So it can change today. You could see an attitude shift where, hey, it's a little warmer than we thought. But still, we just don't have any supportive news. You're going to need a weather shift, I think, at this point. And the funds are just relentless in their selling of these grains, especially soy meal and wheat. They just don't let it up. And now lately it's been corn.
Do you think, I know there's not the bat phone. We've talked about that, where funds are calling each other. It is momentum driven. Like they have their signals and they just keep adding.
Yep.
And they probably all follow the same signals. They're probably using some AI thing to trade and with the same rules or whatever.
And they trip each other's trigger once it gets to be a big momentum play. And then, and I no doubt AI is tightening up all their programs. It's been in trading forever, but it's, probably faster than ever. So that's probably some of the whipsaws you've been seeing. A lot of complaining online about it. But that's what are you going to do?
Well, that's what I was going to ask, actually. So do you think that those triggers get tripped the other way faster, like when it does switch, when there is news? There's plenty of funds that employ, you've talked about it, the best meteorologists. So they're watching out farther.
Yep.
They're better than my Wonderground app.
Yeah.
Better than the Weather Channel.
Yeah, that's something that actually we've been talking about for a long time. It's only hit the news recently that the hedge funds hire the best weather people that they can. Freight companies, big shipping companies, oil companies. There's a huge demand for the correct weather. So that's why you're seeing the last couple of years the funds really commit to all these shorts. It seems early and the rain's not here, but they've been right every time. Like it's 2 weeks out, their guys seem to be right every time. We don't even have those discussions this year. There's nothing even to we have a hot and dry area. No, we have some yellow corn. They're not going to pay attention to that. It doesn't look good in North Dakota, Minnesota, South Dakota. But Minnesota, like the last couple of days, it went from yellow to now green again. And that's what the trade's trading. I mean, that's when you're really scraping the bottom of the barrel when you're talking about the first crop ratings and yellow corn, to try to make a bull argument. They completely blew that off. They did not care. But it is a long summer. I just don't like the seasonal windows getting shorter. We got 3 weeks here.
Yeah.
And normally you have something developing or some story by now, and there's really not that happening right now, except for Ohio. That's very real.
Yeah, we'll have to see how much that matters to people outside of Ohio. I'm sure it matters a lot to everyone in Ohio.
It does, and like you say, when these numbers show up, it's going to be fall. Maybe June, but USDA doesn't generally shift stuff that fast. You might see 500,000 less corn acres in June, but if the weather's really good, it's not going to matter. So we'll quit focusing on the negative, and you just take it day by day. What last week looked great. Looked like we were going to try to build something, and we were getting up to some older high, like some recent highs that we'd been to, and then it just completely failed, and we're right back into the miserable talk.
Yeah. Well, John, markets just opened, so we should probably wrap up here. I'm sure our phones are going to start blowing up. Yeah. Because there's so much to do, as we just talked about.
Everybody wants to talk about how negative this is. Yeah, that's their favorite subject.
About to get crazy.
It's funny with the phones. The phones would ring if you would have a hot and dry forecast right now. We probably would be very, very busy.
Absolutely.
But no, not with this kind of forecast. It slows things down.
All right, fine. Next week we're talking metals and another exciting market, crude oil.
Yeah, we'll go away from all this negativity unless there's something to talk about, and we'll start talking about some of these other markets that guys trade that aren't necessarily hedging related. Some of it's going to be energies. That's definitely hedging.
Yeah.
And then we'll talk about metals, and we'll talk about some of these markets that we don't normally talk about.
I really do want to dive into interest rates next week because it's one, super important, and two, that's a market that is having some issues right now.
Yeah, that's that one's highly unpredictable. 1 minute it looks like they're going to lower rates, the next minute they're going to raise rates, and then you have the back end, which they don't have control over, is doing whatever it wants to do, and that is higher rates right now. So yeah, very interesting mix. And then of course we didn't even talk about the tariff. The tariffs are off. That was in the news. It didn't seem to affect the markets one bit. The stock market went up.
Yeah.
And then it's gonna, the tariffs will the interest rates and tariffs tie together. We'll talk about all that next week.
Sounds great. Well, why don't you leave your number, John?
218-731-1578.
Thanks.
Yep. I don't even know what this is going to sound like. I had never heard it normal.
Yeah.
My volume was down the whole time.
Oh, your volume was down on the headphones?
I've never heard it sound like this.